Hello everyone, and welcome back to our channel. Today we have news that has shaken the world of finance. Legendary investor Warren Buffett, known as the Oracle of Omaha, has announced his intention to retire from his position as CEO of Berkshire Hathaway at the end of this year. This is surprising news, especially considering that at 94 years old, he had always stated he had no plans to retire. In this video, we will deeply explore this momentous announcement, review Warren Buffett's incredible life and career, analyze his unique investment philosophy, and take a look at the future of Berkshire Hathaway without its helmsman. The announcement came unexpectedly this past Saturday during Berkshire Hathaway's annual shareholders meeting in Omaha. After a 5-hour question and answer session, Buffett dropped the news of his retirement, effective at the end of 2025. He also revealed that he will recommend to the board of directors that Greg Abel, currently vice chairman in charge of all of Berkshire's non-insurance operations, be his successor as CEO. Abel has been considered Buffett's designated successor for years, but it was assumed the transition would occur after Warren's passing. Buffett expressed his confidence in Abel, stating that he believes Berkshire's prospects will be better under his management than under his own. To reaffirm his commitment to the company he built, he assured shareholders that he has no intention, zero, of selling a single share of Berkshire Hathaway, planning to eventually donate his fortune. This announcement, received with a prolonged ovation by the thousands of investors present, marks the end of a more than 60-year leadership at the helm of the company. To understand the magnitude of Warren Buffett's legacy, we must go back in time and explore his origins. Warren Edward Buffett was born on August 30, 1930, in Omaha, Nebraska. From a very young age, he showed an innate ability for business and numbers. At just 6 years old, he would buy packs of 6 Coca-Colas for 25 cents and sell the individual bottles for 5 cents each, making a 20% profit. At 11 years old, he made his first stock investment, buying 3 shares of City Service Preferred for himself and 3 for his sister. Although the shares initially fell, he patiently waited for them to recover and sold them for a small profit. This early experience taught him a valuable lesson about patience in investing. Buffett continued to cultivate his interest in business during his teenage years. He delivered newspapers, sold used golf balls and postage stamps, and even bought a pinball machine that he placed in a local barbershop, later expanding the business to other locations. When he filed his first tax return at age 13, he deducted $35 for the use of his bicycle and watch on his newspaper delivery route. Despite his desire to dive directly into the business world, his father, a stockbroker and congressman, insisted that he go to college. He studied at the Wharton School of the University of Pennsylvania, but felt he already knew more than his professors and transferred to the University of Nebraska, where he graduated. However, it was his time at Columbia University for graduate school that truly shaped his investment philosophy. At Columbia, Warren Buffett had the good fortune to study under the tutelage of Benjamin Graham, considered the father of value investing. Graham taught Buffett the importance of investing in companies trading below their intrinsic value, that is, buying a dollar for 50 cents. This philosophy is based on a rigorous analysis of a company's financial fundamentals, seeking solid businesses with a margin of safety. Unlike Graham, who focused more strictly on the quantitative aspects of a company, balance sheets and income, Buffett also valued intangible elements such as the quality of the management team, the strength of the brand, and the existence of a durable competitive advantage, or economic moat, that would protect the business from competition in the long term. Buffett worked for Graham for a time before returning to Omaha in 1956 and founding Buffett Associates Limited. Applying the principles of value investing, he achieved significant returns, far outperforming the market. By 1962, his investment partnership was managing millions of dollars. It was during this time that he began acquiring shares in a struggling textile company called Berkshire Hathaway. The history of Berkshire Hathaway dates back to 1839 as a textile mill. Warren Buffett began buying shares of the company in the 1960s, initially seeing the opportunity as a value investment in a company trading below its book value. However, he became frustrated with the management of the textile business. In 1965, he took full control of Berkshire Hathaway. What followed was a masterful transformation. Buffett gradually dismantled the unprofitable textile business and used the cash flow to acquire stakes in and eventually full ownership of a wide range of companies across various sectors. He began with acquisitions in the insurance sector, leveraging the float the money insurers hold from premiums before paying claims to finance other investments. The acquisition of National Indemnity Company in 1967 was a crucial step in this direction. Over time, Berkshire Hathaway became a vast conglomerate with holdings in iconic companies such as Coca-Cola, GEICO, American Express, Apple, and many others. Buffett's strategy was not simply to buy stocks, but to acquire quality businesses to hold for the long term, ideally forever. His focus on discipline, patience, and investing in businesses he understands and that have clear competitive advantages has been the key to his extraordinary success. Warren Buffett is revered in the world of finance not only for his incredible investment track record, but also for his wisdom and his direct and simple communication. His annual letters to Berkshire Hathaway shareholders are required reading for investors worldwide, full of insights on investing, business, economics, and life. His investment philosophy can be summarized in several key principles. Value investing, buying solid companies trading below their intrinsic value. Think like a business owner. View stocks not as mere papers to be traded, but as ownership stakes in real businesses. Margin of safety, buying at a significant discount to intrinsic value to protect against potential miscalculations or market fluctuations. Durable competitive advantage, economic moat, investing in companies with unique characteristics that allow them to maintain profitability over the long term, strong brand, low costs, network effects, etc. Long term, holding investments for many years to benefit from the power of compounding. As he says, our favorite holding period is forever. Simplicity and understanding. Investing only in businesses that one understands. Buffett has avoided investments in sectors or companies he considers outside his circle of competence. Be fearful when others are greedy and greedy when others are fearful. Taking advantage of market downturns caused by panic to buy shares of quality companies at discounted prices. Buffett's discipline in adhering to these principles, even during times of market euphoria or panic, is one of the main reasons for his success over decades. He has built Berkshire Hathaway not only as a money-making machine, but also with a unique culture of frugality, decentralization, and trust in the managers of its subsidiaries. Despite amassing one of the world's largest fortunes, Warren Buffett is known for his relatively modest lifestyle and his immense generosity. He still lives in the same house in Omaha he bought in 1958. His commitment to philanthropy is as remarkable as his investing prowess. In 2006, he announced that he would donate the vast majority of his wealth to charitable foundations, with the Bill and Melinda Gates Foundation being the primary recipient. This multi-billion-dollar donation was one of the largest in history and has had a significant impact on fighting diseases, reducing poverty, and improving education globally. He has also made significant contributions to the foundations run by his children and to the Susan Thompson Buffett Foundation, named in honor of his late first wife. Warren Buffett's retirement raises questions about the future of Berkshire Hathaway. While Greg Abel has been groomed to take over for years, the absence of Buffett's iconic figure will be a seismic change. Greg Abel joined Berkshire Hathaway Energy in 1992 and has played key roles in the expansion and management of the conglomerate's various non-insurance operations. He is known for his operational acumen and his ability to manage complex businesses. The Berkshire Hathaway model is designed to endure beyond Warren Buffett. The company owns a diversified portfolio of solid businesses and a team of talented managers in its subsidiaries. Furthermore, the capital allocation process, while overseen by Buffett, has increasingly involved other executives in recent years. Ted Weschler and Todd Combs manage a significant portion of Berkshire's equity investment portfolio. Greg Abel is expected to continue Berkshire's decentralized culture and long-term investment philosophy. The main challenge will be to maintain investor confidence and replicate as much as possible Buffett's extraordinary ability to allocate capital profitably and make major acquisitions. Buffett's decision not to sell his shares and keep his fortune invested in Berkshire Hathaway under Abel's management is a strong vote of confidence in his successor and the future of the company. Warren Buffett's legacy goes far beyond the immense wealth he has created for himself and for Berkshire Hathaway shareholders. He has shown that investing doesn't have to be a gamble, but can be a rational and disciplined process based on understanding businesses and having patience. His emphasis on ethics, integrity, and transparency has been a refreshing counterpoint in a financial world often perceived as opaque. He has popularized value investing and influenced generations of investors and fund managers. His ability to communicate complex financial ideas in a simple and relatable way has made him an educator for millions. Berkshire Hathaway, under his leadership, has demonstrated the power of compounding over decades. His focus on reinvesting earnings and allowing his businesses to grow has created exponential value for shareholders. He has weathered multiple economic and market crises, maintaining calm and a long-term perspective. Warren Buffett's retirement marks the end of an era in the investment world. His impact and legacy will endure for many years. He has been a singular figure, a brilliant investor, an exceptional business leader, and a dedicated philanthropist. Although he will no longer be in day-to-day command, his influence will continue to be felt at Berkshire Hathaway and in the global investment community. The transition to Greg Abel will be closely watched, but the solid foundation, culture, and philosophy that Buffett has instilled in Berkshire Hathaway are designed to last. It is a time to reflect on Warren Buffett's extraordinary career and the invaluable lessons he has taught us about investing, business, and life. We wish him the very best in his well-deserved retirement. What do you think about Warren Buffett's announcement and his legacy? Leave your comments below. If you like this video, don't forget to give it a like and subscribe for more content on finance and investments. Thanks for watching, and see you next time.